Today, market sentiment on Wall Street depends on the degree of optimism or pessimism rather on economic data. The information available in the early New York session may trigger both the risk on and the risk off moods. The major US stock indexes traded mixed yesterday. The high-tech sector was the main benefactor of the optimism that enabled the Nasdaq's growth. The Dow Jones slipped by 228 points or 0.68% yesterday. The Nasdaq recouped the losses incurred on Tuesday and gained 0.47%. The S&P 500 sank by 0.38% to close at 4,055 points. The benchmark indexes traded in the green in the pre-market today. Futures on the US stock indexes grew from 0.4% to 1.1. The S&P is expected to trade in the corridor between 4,020 and 4,110 points. The shares of a sensitive transport company slumped to the lowest level in 11 months. The banking sector also extended its losses. At the same time, the Nasdaq found support from upbeat Microsoft's results. Microsoft shares jumped by 7.2% in light of a strong quarterly revenue and sales, including artificial intelligence products. Amazon shares rose by 2.3%. Datadog shares surged by 10.5%, and shares of cloud computing giant Snowflake closed 8.3%. Alphabet also reported better than expected earnings for the first quarter. It unveiled its program of share purchases worth $70 billion. Still, its shares edged down by 0.1%. Meta shares climbed by almost 10% because its revenue forecast for the second quarter was beyond Wall Street consensus. Indeed, the digital advertising market shifts to reliable and time-tested platforms. All in all, the high-tech sector in the S&P 500 is the only strong performer with a 1.7% intraday gain among 11 sectors. The banking sector has come under pressure. Investors again stoking fears about financial health. Shares of the regional lender First Republic Bank plummeted by 29% to a new record low for the second day straight. This pushed the banking sector 1.4% down intraday. Investors voiced concerns over the modern news. The US government is unwilling to take rescue measures after the bank reported massive deposit withdrawals earlier this week, and US financial watchdogs are poised to downgrade the estimates of the First Republic. This could put a lid on its borrowings from the Federal Reserve, and the bank's shares have nosedived by 96.1% this year. Nevertheless, shares of another regional bank, PacWest, rose by 7.5% because it reported a higher than expected profit in the first quarter and stemmed the outflow of deposits. Futures on the US stock indexes gained ground in the New York pre-market because the optimistic forecast by Meta platforms supported shares of social media platforms. A series of corporate reports aroused more hopes than fears. Meta platform shares leapt by 14% in the pre-market because the quarterly revenue forecast surpassed the consensus. CEO Mark Zuckerberg said that artificial intelligence would boost the traffic on Facebook and Instagram. Meta ranks second among the S&P shares with a 74% increase in the value this year. Nvidia shares have looked the strongest result. Shares of social media services Snap and Pinterest have grown by 3.4% and 2.8% respectively. eBay shares rose by 3% after the company predicted the revenue in the ongoing quarter higher than Wall Street forecasts. Shares of a heavy machinery Caterpillar also surpassed expectations in terms of profit. The company reported revenue growth of 31% because rising Infrastructure spending in the United States increased by companies' order book and mitigated the blow from a mounting production costs. Caterpillar shares increased by 3.2% before the opening bell. Amazon and Intel are high-tech giants to provide the corporate reports later after the closing bell. As for the economic calendar, the market found out that the data on the US economic growth, the GDP slowed down more than expected. The US national economic output grew by a minor 1.1% sequentially in the first quarter, much slower from the 2.6% growth in the previous quarter. The actual reading fell short of expectations as the market had projected considerable growth of 2%. All in all, it's the weakest GDP increase since the second quarter of 2022 because business investments went down and the cycle of rate hikes made an adverse impact on the housing market. Curiously, investors downplay the gravity of the US GDP data and even corporate reports. The market is anticipating the Fed's policy meeting, thus shifting focus on the labor market. The update on unemployment claims could spoil market sentiment today. And the US initial unemployment claims suddenly contracted by 18,000 last week to 230,000. The consensus was about 240,000 new claims, and thus the labor market remains very tight. In addition, the market is also alarmed about the US enormous federal debt. In a narrow margin, the House of Representatives voted for the bill to raise the public debt ceiling worth $31.4 trillion. The bill includes sharp budget spending cuts for a decade ahead. Analysts warn that the bill will be hardly approved in the Senate. Later today, the market will get to know pending home sales data for March and a series of corporate reports by Mastercard, Merck, Amgen, Pinterest, Snap, American Airlines, and S&P Global. The currency market is trading under high volatility, benefiting the US dollar. Its index rebounded to 101.7, having gained 0.3%. And the intraday corridor for the index is seen between 101.20 and 101.90. Yesterday, the US dollar index sank by 0.39%. Besides, it has slumped by more than 11% since it reached the 20-year high in September. The greenback's weakness is driven by a few factors: waning inflation in the United States, the anticipated completion of a monetary tightening, and stronger economic performance in Europe. Today, the US dollar perked up despite a slowdown in the US economic growth, which could assure the US Fed to halt rate hikes after the meeting in May. The greenback cheered the news on unemployment claims that went down sharply. Recently, a few Fed policymakers highlighted the overheated labor market that is to blame for high inflation, and the news supported intraday growth of the greenback. The PCE price index, the Fed's preferable metric, is due on a Friday, so the market could revise its sentiment on the US dollar. The Canadian dollar is trading flat, making faint efforts to recover, and the USD CAD pay is trading at about 1.3630. The instrument is likely to hold in the intraday corridor between 1.3590 and 1.3650. On April 12, the Bank of Canada put the key interest rate on hold at 4.5% for the second time in a row. The regulator maintained the hawkish rhetoric, and the minutes released on a Wednesday showed that the regulator defined the economy as strong as the labor market as resilient. The Bank of Canada predicts that inflation would decline to 3% this summer. but it would need the time to bring inflation down to 2%. In light of the minutes, investors did not revise the forecast, expecting the Bank of Canada to hit a pause button on a rate hikes for a while. As for the oil market, it's trading steadily following a 4% fall on Wednesday. Brent crude is trading at $78.2 a barrel, 0.6% up. WTI rose by 0.4% to trade at $74.76 a barrel. The crypto market is trading quiet after a highly volatile session yesterday. The assets are gaining ground. Bitcoin is extending its rally, but the risk on mood is dampened due to the resilient labor market. Still, Bitcoin has settled at about $28,800, 1.5% up. Popular altcoins are trading mainly in the green, though not all of them. Ethereum, Solana, Ripple, and Litecoin are wavering between a 0.3% dip and 1.5% gain. Yesterday, investors were spooked by Bitcoin's nosedive by 8%. Nevertheless, the crypto regained its footing and settled at $28,800. According to CoinGlass, traders lost a whopping $310 million in the last 25 hours due to activated stop losses of both long and short positions. The market was alarmed by comments from Arkham Intelligence, a blockchain research company. It warned users by mistake that wallets linked to empty gorks and the US government began large Bitcoin transactions. Concerns about bank jitters are bullish for the cryptocurrencies, besides strong corporate records by high-tech giants also prop up the rally in the crypto market. On the flip side, the loaded economic calendar does not provide a clear-cut picture of the future monetary policy in the United States. As for the intraday outlook, Bitcoin could trade in a range between 28,600 and 29,300. If the price escapes from any of the borders, the token might either decline to 27,900 or retest $30,000. And that's all for today. We keep monitoring the financial market situation. Subscribe to the channel and see you online tomorrow.